So this is called Investing in Food is Health, the view from Wall Street. And this is very near and dear to my heart, having been a coverage analyst for a bunch of years, having been a director of equity research. And so I just want to introduce Brian Holland, Managing Director and Senior Analyst from Cowen, Adam Samuelson, VP and Agribusiness Equity Research Analyst from Goldman Sachs. Adam's going to have a few words to say for us briefly that he has to read a disclaimer. And then Ben Theurer, Director and Senior Analyst, America's Agribusiness at Barclays.
Thanks, Paul. So sorry, everyone, for the compliance point, but we're required to make certain disclosures in public appearances about Goldman Sachs' relationships with companies that we discuss. The disclosures relate to investment banking relationships, compensation received, or 1% or more ownership. We're prepared to read aloud disclosures for any issuer upon request. Disclosures and updates to these disclosures are available by ticker on the firm's public website at www.gs.com. Sorry.
You know what? That was almost as fast as those disclaimers on any prescription medicine on TV ads. Well done.
I appreciate the comparison.
Yeah.
Well, and they seem to enjoy them. Do you guys not have disclaimers? We're okay?
What he said.
We'll go with his.
All right. Well, I thought we would kick it off. I think one of the things when you're covering a nascent or a growing industry, and I go back to the internet in the late 90s, you know, there was always a battle to define it and to define it correctly. And that definition had a tendency to keep moving around. And the more analysts you got into the conversation, the more different definitions you had. But the first question I'd have for our three analysts is, how are you defining this? Is it still various segments? Do you have to segregate them? You know, we've heard everything from beneficial ag. We've heard, you know, obviously ag tech, agribusiness. I mean, just looking at your three titles, you know, it seems like everyone is, at this point, taking a different approach. But why don't you just give us just a couple of words on how you define it and maybe how you see it headed?
Sure, I'll kick off. So there isn't one definition, and in part because it's not one sector, it's multiple. This is a cross-disciplinary kind of challenge that straddles different investors, different companies, different technologies. So my specific coverage, the companies from an S&P GICS perspective in public equity land, they straddle the materials sector and the consumer staples sector. Those classifications don't make a lot of sense in some instances. ADM is a food company. Not really sure how that makes sense. Some of the seed companies like Corteva, they're materials, but they're also very much technology driven. And so there isn't one definition. As you see these growth companies emerge, I think once you get a critical mass in some specific subsectors, they might get some more specific delineation in terms of coverage and focus from both the buy and the sell side. We're really not there yet in the public equity universe.
Yeah, I would agree on that. I mean, in our case as well, it's like kind of in the middle of different seats, somewhere between what is the material space, maybe some of the fertilizer space, growing ag technology over there. But then at the same time, there's always a lot of overlap in what we're talking about food. Food is health, and food is obviously a staples category. But there are differences in overlapping with how much food is maybe within agriculture exposure, how much food is actually more the processed food, what we heard at the beginning of the panel today, talking about how bad that is. So we're trying to figure it out and frame it somewhere in the middle of those two very extremes between materials and food.
Yeah, I mean, I think if we go back 10 or 15 years, we had a similar evolution sort of on the natural organic and health and wellness space as a number of players, starting with Hain Celestial, began to proliferate the market. Several have since been acquired, but it sort of started out natural organic, health and wellness, better for you, growth, number of different terminologies. I think to Adam's point, there are a number of different disciplines within this space. So I think it will come down to how many of those players move to the public market and how that's defined. So you can go sustainable food production, you can go ag tech. I think there's a few different ways to think about it, but I think it will be a process that will evolve as we see the number of players who come public and what their core competency is.
I always thought a big part of the job was really educating investors as to how they should look at investments. And again, not just the buy, hold, sell, but really what are the key metrics? How should they be valuing these companies? And I know that we're talking about different companies, so there's a wide range, but we have 15 companies presenting this afternoon. Again, not asking you for recommendations, but asking you what is a smarter way to really value. What are the key things you look at in terms of trying to derive a real sense of valuation for these companies?
Well, let's kick it off. I mean, one of the things we obviously take into consideration at the very beginning is at what stage a certain company is in, right? I mean, if you're a startup company that is trying to build a certain prospect, be it in the farming business, vertical farming, big horizontal farming. So I guess at the very beginning, it's not maybe that much about the revenue generation at the point in time. It's really on the delivery, on some of the construction processes and what needs to be delivered in order to make change happen and to make that food industry more resilient and more valuable for the companies, but also for investors obviously involved in that. But then on the other side, you have obviously a lot of like KPIs you just may want to check if the products actually meet the certain criteria. If you get the ramp up, if you get the marketability of those products, even if the volume might be more limited at the beginning, it's really the trajectory you need to follow quarter by quarter. And the biggest challenge really is that obviously in a process where something is new, you're going to get setbacks. And those setbacks can have certain implications for the broader industry, how it's just perceived as maybe too early stage or just not as developed yet to actually make sense to maybe investment or not.
Yeah, I mean, I think it starts first and foremost with the addressable market. So I think that's where the market would look first. I think that's somewhere like myself, that's where I'd look first, is size of the prize, and then within that, as Ben mentioned, sort of, what are your sight lines into the revenue that you can generate within that? What's your line of sight going forward? And then from there, it's obviously the cost structure. So, what kind of tech do you have? Where do you implement automation? And really what that gets to is returns on capital. So you're thinking out in a nascent space like this, you're looking out at least 3 years, probably 5 or more. You're looking at the TAM, what you can do within that TAM, and how profitably and how quickly you can ramp and scale there. I think those are the starting points for any investment consideration.
Yeah, and I agree with all that, and I would just add, especially when you think about some of the challenges in disrupting existing markets. In the food and the ag space, time and scale are very challenging obstacles to overcome. Especially if you're talking about principal row crops and ingredients, you get one grow cycle a year in most cases. That's a long time to drive adoption and get your farmers, get your scale, to get the critical mass. What are the incumbent ingredients or players that need to be disrupted to then get to the end state on revenue, EBITDA, margins, versus just on absolute basis versus incumbents in that industry. You're trying to evaluate all of that. It's not one answer, because there's a lot of companies here today express that. You have a lot of different companies doing a lot of different things with similar broad goals, but in very different ways.
Is there skepticism about the addressable market? I know when we were first looking at internet stocks, we would get beat up. We'd get beat up not just on valuation, which was probably warranted, but addressable market. If I go back and read the stuff we wrote in 96, 97, it's like even our wildest projections in a very short period of time proved really light. And so we had a hard time defining the addressable market. And as exciting as it was, on one hand, so you'd have the analysts putting out these projections, and then you would have investors saying, oh, you're crazy. They're never going to get to that number. And then five years later, they were 100 times beyond that number. In terms of the addressable market in this area, and the reason we're gathered here today, I mean, what is the level of excitement? Do you find yourself having to make sure that you're constraining yourself, or do you see an opportunity here? I guess that's what I'm trying to say, is what is the size of the opportunity?
Yeah. I mean, that feels fairly tough to call at such an early stage. First of all, within the TAM, the opportunity is significant because the value proposition is so compelling. The quality of the product, the health attributes, the sustainability attributes, the theoretical margin profiles as you get to scale. I could see a similar scenario where 20 years from now we're all looking back at the math that we've done and said, but that was awfully conservative. The difference will be that this is a capital intensive industry. So I think maybe to Adam's point a moment ago, your ability to scale. I think that's going to be the primary determinant. I think also, the diversity of varietals that you can address in this industry, right? So leafy greens is 5% of 1.4 trillion. That's not nothing, but when you start moving into other fruits and vegetables at scale, then the whole of that 1.4 trillion becomes theoretically addressable, and then you get into the dynamics of, again, how quickly can you scale? How easily and readily can you get access to capital? I would argue if you can do the first, you can do the second, and then it becomes a virtuous cycle. And then the third factor within that is obviously, to Adam's point, the incumbents who aren't inclined to yield to the disruptive players, and certainly will try to make it difficult.
And I think, Brian, you're more specifically talking controlled environment agriculture as kind of one big growth vertical that you are seeing capital go towards. And I think taking that a step broader, there's a lot of things here and a lot of companies here talking about different parts of the food space. The total addressable market is in the trillions of dollars. In practice, there's no functional constraint on growth from TAM anytime soon for a lot of these opportunities. I think the difference comes into serviceable addressable market, where there's actually the technology in place to actually meet the end use case for the consumer. Plant protein would be a great example. I mean, you look at the protein market, the animal protein market today, it's an over $1 trillion category. Plant protein, Beyond Burger, Impossible Burger, and the like can substitute for some of those uses today. That's not the $1 trillion opportunity today. If they get the technology right to improve the sensory experience, you get whole muscle cuts, different animal species, that serviceable addressable market can be much, much bigger, but there's a lot of technology development and scaling inside individual companies, inside the broader supply chain that still have to happen to get to that point.
I would add to that, there is one driver of that total addressable market, which as well as sustainability. Because the one thing you need to deal with is you have a certain amount of population today, which is likely going to grow by 40, 50% within the next 3 decades. And that means you need even more food. But at the same time, we're already experiencing change from climate, seeing more extreme weather scenarios, seeing reduced ability to actually grow out what's being needed. So while your TAM on one side is what needs to be produced in food to feed 7 billion today and 10 billion in 30 years, it also needs to be sourced from a more restricted area. So you need to increase those efficiencies. So while in theory you have a TAM today, which is, as Adam said, for example, in the plant and the real meat market being that $1 trillion plus, numbers diverge here, just grow that if the per capita meat consumption is going to be the same in 30 years as it is today. So just by that, if we say it's $1 trillion, that would bring it to 1.4, 1.5 trillion, just by growing the population. And where is this all coming from? Where you want to grow these cattle? You're most likely not going to be able. So the sustainability factor is actually one that is going to drive and most likely help support the TAM discussion as a whole.
So do we really think that's the key to the conversation? And we had a good prep call last week, and I was completely focused on health, food and health, and the nexus of food and health. And what kept coming up was, you're not talking about sustainability. And do you think sustainability is going to ultimately be the key driver for these companies in terms of their story?
Maybe I'll start.
No, and you guys, go ahead.
We agree on that, so I'll let him go first.
So there's a few things. One, I think from the consumer perspective, I mean, we've had healthier foods and better for you foods for a while. I mean, we still see what sells, what wins on the shelf. Consumers like the sugar. And so, to put it bluntly, so getting consumers to change what they want to eat just because it's better for you, it's more than that. Again, to Ben's point, the resource scarcity in terms of land, in terms of water, becomes even more acute as population grows. What's going to drive consumers into some of these new brands, like a Beyond Meat, like an Impossible, et cetera? I mean, the pitch to the consumer, well, you could say it's better for you, and the nutritionists have debates on that when you look at the nutritional panel. But clearly, look, eating a Beyond Burger or an Impossible Burger is going to have it's going to lower the carbon footprint of what you eat. That's a compelling value proposition to a certain subset of consumers who are growing and are younger. That's going to have a meaningful impact in terms of getting consumers to actually eat this stuff. Because it's not about, there's a technical question of can we actually make it and can we scale it? And then there's one, can we actually convince consumers en masse to eat it? Those are very different questions.
And you also have to add to that, as of today, some of that plant-based protein, some of those products require exactly what's not healthy, a lot of processing. There's a lot of ingredients needed to be added to actually get to the texture, get to the taste. So there's still a lot of need to further invent, to improve, to ultimately reduce maybe in the ingredient list, while at the same time keeping up with the taste profile, if not even improve the taste profile, so that you get to the value proposition like this is actually healthier, and at the same time you can do good to the environment. And that's going to be driving consumption with the younger population in particular.
Yeah, I think that point on the younger population, I think I heard in some of the earlier panel that the consumer sort of dictating the data. There'll be 50 million Gen Z entering the workforce within the next decade. They're projected to have 2.1 trillion in after-tax income. That's 50% higher than millennials have today. So what do they care about? Because that's going to dictate purchasing and behavioral decisions. We put out a primer 2 weeks ago, and the surveys suggest that by a factor of 2 to 1, what the Gen Z consumer cares about first and foremost, or that they want to see companies most address, is the environment. And from going back to 2017 to today, that's actually where we've seen the greatest increase in emphasis among Gen Z. So 2 to 1 over health and disease. So I think it's a convergence of health and sustainability, but I think sustainability feels like a more pressing matter, and it certainly feels like a more pressing matter over the past 18 months as we've seen the byproducts of COVID-19 impacting the supply chain, impacting food security, and impacting the cost to attain healthier food products because of issues with procuring the relevant materials, ingredients, et cetera.
Well, I would like to, typically these are the folks asking all the questions. The fact that we've got folks in the room, and I see David raising his hand, I kind of like to turn the tables. And this is your opportunity to ask the analysts some hard questions.
I couldn't resist, guys. I never could ask you questions, and you're always open to ask me as many as you want. So one of the things you see in food is addressable markets or serviceable markets are usually defined by what the incumbent is not. So for example, it's not the old animal-based protein market, it's the newfangled plant-based protein market. Or it's not open field ag, it's controlled environment ag. But when you look at the sources of growth, technology has changed the game. So meat eaters, omnivores, are the greatest source of growth in what's actually being consumed. That could be described as plant-based protein. Or if you think about open field versus CA, the growth we're seeing in North America, controlled environment ag, isn't from people who are desperately focused on not eating open field. They're consumers of fruit and veg, regardless of the type of technology being used. How do you guys reconcile that? When does an industry become more of the incumbent usage occasion, or does it stay niche? How do you think about that?
Well, let me take it first step back, and maybe that's just because of my experience being a European, and I have to bring out this example. So controlled environment agriculture is obviously a good example. If you shop today online or in store in Germany, France, the Netherlands, the UK, it's just tomatoes that are sold or salads that are sold. And they're class 1 or class 2, period. And then you get a little footnote, can be sourced in Italy, Spain, or the Netherlands. That's it. And you don't know. You just don't know. And the point is, 30 years ago, I tell you, we did know, because the Dutch tomato was like a ball of water. And we had this funny saying that Dutch tomatoes are actually good to play tennis with. Now, that has changed, and the taste profile has improved, and we are at the point, at least in some markets in Europe, where controlled environment agriculture actually has overtaken all that share, and consumers don't really know where it's coming from. It just comes down to, I want tomatoes, I want salad, I want some cucumber, and it doesn't matter where it's coming from. And I think that's still a road to be driven here in the US, to be basically, that journey is just at the beginning, and we got a big opportunity here. There's always the need to compete against some of the open field where you just don't have to take that much care. It's not as capital intense. So there's a lot of things you have to overcome. But one of the greatest arguments you can have in favor is just that it is actually healthier, that it is likely traveled less pesticides. I mean, there's a lot of things that you can put on a core product that is not labeled as organic or whatsoever, that's just standard on shelf, but it's actually going to be better. And as that is priced at the same time, or maybe even lower, that's the most valuable argument you can have for consumers.
Maybe I agree with all that. I would maybe take a different angle and say, we have a good idea of how much we eat today.
Yeah.
We know what the per capita consumption of animal protein is around the world by country, by species. Some data is a little better than others, but we have a good idea. We know how much the fruit and vegetables we eat. That helps us define. We're not going to suddenly get people to eat twice as much food in aggregate. So let's break that down. Okay, well, plant protein, David, an example you know well. Let's get people to eat 5 pounds of plant-based from beef. Okay, that becomes a certain opportunity. How do we get that to grow further? Well, we need to get the product to be better and get to serve more form factors, more use occasions. We need to get the cost down to make it more accessible to more consumers on an everyday basis. And then there's an enormous marketing challenge in terms of getting it on every shelf, on every menu, in every restaurant, ubiquitously, and get people convinced that they need to eat it. There's different challenges in all of that people in this room are all trying to solve from different ways. Some multiple challenges at once.
Yeah, I think the education's the biggest key. David, I think an example that comes to mind as far as a segment that has differentiated itself is within plant-based beverages, because there's a need state, because depending on where you're looking, anywhere upwards of 80% of consumers in Asia, for instance, are lactose intolerant. So there's a need state that exists, there's a value proposition, and you can that's ahead of plant-based meat from a merchandising standpoint, from a quality standpoint. Certainly, some of the folks in the plant-based meat space well that are making tremendous strides to improve the quality of that in the past decade. But plant-based beverages has been a little bit ahead of that. So I think, to their point, you need education. You need a significant amount of education. And then again, it goes back to size and scale. We can't, until we get to a point of mainstreaming, think about the consumer treating the products differently or consuming them differently, i.e. more, until we start to see it on a mainstream level. But right now, we can define the baskets at which in which everyone's competing. But ultimately, we need to see how they behave with that education. So I know more about this product. I know it's cleaner. I know it's more sustainable. Now I'm making a decision based off that. When we start to see that, I think that's when we see the step function change and we start to look at it differently from its incumbent.
Do we have any other questions from the audience? All right, I'm going to pose one, as we wind down here. If you had one thing that you could impart to investors today, that you would want this group here to take off of the farm and say, you know what, I learned one thing. I learned one thing today up at Brooklyn Grange, or something I think differently about now than I did before coming to this. What would that be?
Think about the challenge to scale. The market opportunity here is enormous. The time to market and the time to scale, which are not the same things, and the capital intensity of that scale, I think you need to be very discerning early on about where the key bottlenecks are in terms of how you get there. Because I think, especially when you get to the row crop side, you get one shot a year to convince a farmer to change what they're planting, to test out what you're developing and grow. And that takes a long time to get widespread adoption. Think about the working capital intensity of that. Got to be thoughtful about how long it takes for some of these opportunities, technologies to be real.
No, I mean, I think that's exactly right. So there's a combination of that, and because of the magnitude of the size of opportunity, there will be multiple winners. Again, when you look from 30,000 feet in, it feels like everybody's doing the same thing. That's kind of the question I get from investors is, boy, this market seems awfully crowded. How's this going to work? And then you said, well, you have to break down and look. Again, I've been focused a little bit more on the CEA space thus far, given my background in consumer packaged goods and consumer-facing products. But when you start to break down, everyone's in sort of different varietals. There's a regional component to this story right now. Until you can achieve scale and achieve a national and in many cases probably global footprint. Certainly that's the aspiration. But I think Adam's point is spot on. It's going to start with the challenges of scale and the time that's required.
Yeah, and I'll just round it up. I mean, obviously, the capital intensity of that business is huge because it's investments in technology. And if you think back what the 90s, early 2000s was, building data centers and actually getting the storage of the data to understand this. Well, today, you can store a lot of gigabytes on your little iPhone, which 20 years ago, you weren't able at all. There was not even a hard disk. I mean, you need big data centers for the same amount. So, and now it's all going into the cloud and all that kind of stuff. So what 20 years ago here required a lot of investments for that technology in agriculture, technology in food in order to happen today, it also requires a lot of capital investment. And the question really is the smart way. When do you want to go to market? How do you want to finance all these capital needs? Do you want to finance them all through equity? Do you want to do bank financing, special project finance? That's the questions the companies, I think, have to answer for themselves and find the best way. And to Brian's point, there are going to be multiple winners because the market is huge.
And the capital's out there, by the way. I mean, the capital's out there for those that can execute and demonstrate an ability to grow because the opportunity is so significant, and that's where the capital is going to migrate to. And then they will ultimately be the consolidators. It's a race to scale, I think.
Okay. I think with that, I'm going to adhere to my own advice and keep us on time.